Hello guys, my name is ATP and welcome to a new episode of the Testing Indicator series, a new series on my channel where I test different trading indicators on thousands of trades, always on the same sample and conditions, using Forex pairs, cryptocurrencies, commodities and stocks to discover which ones are the best and at the same time provide you without any clickbait with real results and in-depth statistical analysis about each one, something that you have never seen before on other YouTube channel. Let's get started. Before starting our tests on today's indicator, which by the way is a new middle line cross indicator created in 2019 called Dorsey Inertia, a smoothed version of the popular relative volatility index, I will remind you about the trading sample and conditions that I will use in every video from this series. For the backtesting process, I will be using a special trading bot that I created only for this series, which will give us the possibility of quickly testing any indicator we want on a big sample size in seconds with proven results. In the last episode, I had 10 indicators available to test and now I have 2 new ones, the Dorsey Inertia and the Forecast Oscillator, and from week to week, new indicators will be added to this special trading tool. During the video, I will tell you how you can access and use this tool as well. Then, for every indicator, I will backtest it in 3 different time frames, the 30-minute, the 1 hour and the daily one. On every time frame, I will use the data sample from 2022 and 2023 with all the available trading sessions with an efficient and diverse portfolio of assets from different markets, which are Bitcoin, Ethereum, XRP, 3 currency pairs, gold, oil, the S&P 500 index and the Apple stock, being the data sources the most used ones. I will present you the results of every asset individually and also together, because for every backtest I will create a trading journal with all the trades given by the indicator in the 3 different time frames. The risk management will also be the same one I explained in the first episode of this series, and to filter losing signals from the tested indicators, I will always use a 200 period exponential moving average to only take trades that are in the same direction as the overall trend. And so, these are our conditions, which were exactly the ones used to test the indicators from past episodes. Let's then start the analysis of today's indicator. As usual, I'm on TradingView, the platform where all the work is going to happen, which can give you a $30 bonus after you create a free account by using my link that is down below. So, before the backtests, I will quickly present you the Dorsey Inertia, which all of you can use by clicking on the Indicators tab and searching for it. This indicator is free to use. The Dorsey Inertia is a new momentum indicator calculated based on standard deviations. It is formed by this line that oscillates around this 50 level and changes from green to red according to the market's momentum. A long signal appears when the line crosses above the 50 level and turns green, and the short signal appears when the line crosses below the 50 level and turns red. Simple as that. In addition, you can also use this indicator as a filter indicator to confirm entry signals from other indicators. After inserting the Dorsey Inertia indicator into my trading bot, I can quickly choose it and play with its settings to optimize it, because the bot calculates the results in seconds. But for this backtest, I will use the default settings, which are 21, 14 and 14. And you already know that I'm going to use the 200 exponential moving average as a filter indicator, and so I will check this option here. As you can see, all the backtesting conditions are the ones I have defined, and the trading bot not only displays every valid trade on the charts, but also gives me the statistics about each asset I want to backtest down below on the Strategy Tester tab. And because I have the premium TradingView plan, I can download all the trades the bot takes, and that's what I'm going to do to create the trading journals. I will speed up the video, but you can slow it down on the YouTube settings. While you watch the backtest being carried out, imagine saving hours of time and energy by testing hundreds of indicators in just seconds across any market with proven results. That would be life-changing, right? With full access to this trading bot for a lifetime and weekly updates available through my Patreon, you can take your trading game to the next level. Simply click on the shopping option to find more information and important links. But don't wait too long. As new indicators are added every week, the value of this tool will only increase. While its current price is symbolic, similar tools on other websites can cost thousands of dollars. Plus, with new indicators added weekly, you are investing in a tool that will continue to grow in value. By the end of the year, it will feature hundreds of different indicators for you to explore. Seize this opportunity and secure your access now before it's too late. So, after inserting all the trades on my trading journal, here I got the results of the Dorsey Inertia Indicator on the 30-minute time frame, here on the 1-hour one, and next to it on the daily time frame. Overall, the results don't look very good, but let's analyze each time frame more carefully. In the 30-minute one, after more than 7,000 trades, it achieved a win rate of 48.37% and a net loss of 42%. Here you can check the results of every single asset, where you can notice that the assets from the stock market were the ones that performed better, and by looking at the equity chart, we can verify that in this time frame, the indicator in these conditions is not consistent. In this period right here, it achieved good results and a nice equity curve, but then it wasn't able to adapt to different market conditions and got this huge drawdown above 200%. Then in the 1-hour time frame, after almost 4,000 trades, this indicator achieved a win rate of about 48.78% and a net profit of 31%. Again, we can notice that the stock market assets were the ones that performed better, which is a sign that this indicator is a good option for a stock trader. By looking at the equity curve, despite the small profit, it looks flat. And finally, on the daily time frame, after 173 trades, the indicator achieved a win rate of 49.13% and a small net loss of 3%, so a break-even result that can also be noticed when looking at the equity chart. So overall, this indicator in these conditions proved that it is not very consistent, although it seems to me that it can have a good potential for a stock market trading strategy. In our ranking sheet, it will be placed at the bottom of the table because the overall stats of the Indian oscillator and the half trend are much better, as you can see. If you would like to access this ranking sheet Excel, you can do it for free. The link is down below. And so the Indian oscillator continues to be our top 1 indicator tested so far in this new series. If you think you have an indicator that can beat the Indian oscillator, you can share it with me in the comments or on my free Discord community, and probably you will see it in a future episode of this series. So do not forget to subscribe to don't miss any video of this series. And for those who would like to work with me on a special project, from creating custom strategies to carrying out statistical and robustness studies, you can find all my available services on my website algotradepro.org. And that's it. Be well, thank you, and I see you in the next episode.